licensed in the new state for doing fairly similar work, where the nature of the work doesn't really shift much from state to state. And so over the years, we've seen more and more of this licensing, which is overseen by states and state licensing boards, more and more of it. But I think what's different now is that the pressure is not just on those types of jobs, where there's greater consensus about do we really need licensing here. We're now seeing that in these in jobs where people are working in courtrooms and schools and hospitals, where there is a lot of concern about your people's health is on the line, you're representing clients in courtrooms. The arguments in support of licensing when it comes to protecting public health and safety are probably most pronounced in these professions. And so it's interesting that that it's expanding in those areas as well.
What's also interesting there is what you're describing on a state-by-state basis, just seems like there's got to be a way of being used to generate revenue, right? And so how much of that has entered the conversation, licensing as a way to boost state revenues?
Yeah, I think that's a lot of the argument for sure. A lot of the pushback against some of these regimes is that it is sort of self-serving in a sense that the woman we spoke with calls the bar exam, for example, like a gatekeeping measure, and there's a sense that these restrictions serve the members. That, if you can restrict the number of people entering the field, those people are going to get paid more because there are fewer of them providing their services. Similarly, for the associations and the boards who are doling out these licenses, it is the source of revenue. And so I spoke with a professor at the University of Minnesota who's done a lot on licensing, Morris Kleiner. He wrote a piece in 2018 approximating $200 billion, up to $200 billion annually in what he calls misallocated resources connected to excessive licensing.
Well, I got to say, I want my electrician, though, to be licensed because I really don't.
But do you care if your electrician is licensed in New Jersey or Pennsylvania?
Come on, he said he was over credentialed.
This feels like, too, what's going on with colleges, right? The application process, with the test optional, because I feel like it's such a huge industry. There's so much money involved, but you're increasingly seeing colleges step away. But there's also a component to your story, Jordan, when it comes to racial exclusion because of excessive licensing. Just got about 30 seconds. What you found out on that?
Sure. Well, the Minneapolis Federal Reserve just put out research last month showing that is the case, that across education levels, we see this gap when it comes to licensing, where white workers are disproportionately more licensed. And, in a lot of different sectors, obtaining a license is very costly and very time consuming, and it can be cost prohibitive. So people who have more money to begin with are more likely to break through those hoops. And so the data definitely supports that.
Well, it's certainly a sign of the times. We're going to leave it there. Really appreciate it, Jordan. Jordan Yadu, he's U.S. economics reporter at Bloomberg Economics, joining us on the phone from Washington. And, of course, our thanks to Joel Weber, editor of Bloomberg Business Week, here in our Interactive Broker Studio. Can we tell everybody why you're dressed up?
We got some National Magazine awards tonight.
Oh, wow.
Maybe up for a couple.
Yeah. Nice, Joel.
Good luck.
Maybe we come in tomorrow with a trophy or something.
Okay, fingers crossed that plays out. All right, check out this story. It's in the upcoming issue of Bloomberg Business Week magazine. It will be out later this week, online, though, already, and on the Bloomberg terminal. You're listening to Bloomberg Radio, and this is Bloomberg Business Week.
To the close, Bloomberg's comprehensive cross-platform coverage ahead of the U.S. market close starts right now.
And this is Countdown to the Close, just 60 minutes left in your trading session. Caroline Hyde, Romain Bostic, Taylor Riggs, joined now by our colleagues Carol Massa, Tim Stenovic, as we go, as we do each day, cross-platform, TV, radio, YouTube, to dig into what is a complete reversal from yesterday, Carol.
Yeah, right. New day, new trade, that's for sure. In terms of looking for some outperformance today, the healthcare names actually trading a little bit higher. They were rallying up about 1.5% earlier in the day, but right now holding on to a gain of about 0.5%. There's been some underperformance of the group as of late, Tim, but we are seeing some investors move into kind of a safer play, if you will.
Well, speaking of underperformance, shares of semiconductor companies are tumbling. The stock's having its worst day in just about a month right now, down about 4%. All 30 components of it, Caroline, lower.
And that is why it drags the NASDAQ down 1.9%. Let's go to the benchmarks. We're off by 277 points on the NASDAQ, totally wiping out basically yesterday's rally to the upside. This as we once again get those hawkish comments, this time coming from Lael Brainard, from, of course, Esther George, the Kansas City Fed. We got the S&P 500 off by 0.9%. Volumes basically flat. Volumes actually still lower on the NASDAQ, and the Dow Jones Industrial Average is currently off by 0.5%. Volumes off by about, well, 18% compared to your usual. And I leave you with the Russell 2000, another key underperformer. Interesting that it's always big tech and the Russell 2000, your small caps, that get dragged lower on the same day, down by 35 points, Taylor. That's 1.7% to the down.
You certainly see that a little bit on these sectors as well, but also a reversal of yesterday as well, too, right? It is so interesting. When yields are climbing on days like today, it's utilities and real estate that outperform. That doesn't totally make sense, but nonetheless, here we are. Those are up about 1% or so. At the bottom of the screen, like Caroline mentioned, technology, those are off about 2%. Discretionary as well remain really interesting given the gainer yesterday, off as well, 2% or so on the day.
Yeah, you flip up the board here. Of course, all the talk still remains, of course, about Elon Musk and his board seat now on Twitter. Went from a passive stake to a board seat. Shares were up 27% yesterday, up another 3% here on the day. But to the downside, and a big part of the reason why we're lower is a pretty broad-based decline that we're seeing in the chip space. Applied materials down about 5.5%, the biggest one-day drop that we've seen going back to January, and the Philadelphia Semiconductor Index having one of its biggest one-day drops in more than a month here. Now, to the upside, two bright spots here. Mosaic and some of the fertilizer companies higher here on the day. This on the back of that news that the European Union is going to be start restricting more imports from Russia, including potentially coal, but also a lot of fertilizer materials, including potash. So keep an eye on that space, and keep an eye on Hershey Foods. Chocolate, of course, never goes out of style. Those shares up 1%, 218.71.
Need
that
fertilizer
is a record
too, right?
high.
To grow those
It's more
beans.
season, not even.
It is all about inflationary pressures. It is all about, therefore, what happens cross-asset when you see such inflationary pressures, when you see an Esther George of the Kansas City Fed talking about 50 basis points going to be an option in the next rate hike, when you see what is a two-year yield at the moment touching 2.5%, the first time we've seen that since March 2019, and actually sort of outpacing the Fed's long-term dot plot projection. But how much does this, Carol, start to factor in the balance sheet move?
Yeah, exactly. Listen, I feel like if we have one thing that we need to talk about, it is about the balance sheet. And you've had Mary Daly and you've had Lael Brainard come out and much more aggressive in terms of expectations when we start to see moves on the balance sheet. So let's get to it, because Lael Brainard giving a speech, some prepared remarks that we got wind of. Here's what she had to say. Check it out.
Given that the recovery has been considerably stronger and faster than in the previous cycle, I expect the balance sheet to shrink considerably more rapidly than in the previous recovery, with significantly larger caps in a much shorter period to phase in the maximum caps compared with 2017 to 19.
All right, so that's Lael Brainard of the U.S. Federal Reserve. What's interesting, guys, right? We've all talked a lot about the markets already kind of factoring aggressive rate moves by the Federal Reserve. We were talking with Gina Martin-Adams earlier at the top of our broadcast, and she said what isn't probably factored in, though, is some reductions in the balance sheet, and certainly aggressive ones, Tim.
So what do we learn about the pace tomorrow? We think back to a couple weeks ago when we heard from Fed Chair Jay Powell at the press conference following the policy meeting. He did say that there would be details in the minutes about the pace of balance sheet reduction. So what do we think? What does significantly larger caps, a much shorter period to phase in the maximum caps compared with 2017 to 2019 actually mean?
Yeah, maybe just a faster pace of rolling off that balance sheet, Tim. Certainly, I think is going to be one of the more interesting minutes that we get in a long time. Romaine, I'll punt this to you. I think really interesting on days like today, you get sort of a re-steepening of the yield curve, a rejection of the inversion. And what I also thought was interesting is the conversation about tightening of the balance sheet, about faster rate hikes. Yeah. It isn't, at least for today, slowing sort of those inflation and growth expectations on the horizon if you're believing some of the longer term yield curve moves that we're seeing.
Yeah, and if you believe it, I mean, we should still point out that a lot of other parts of the yield curve still remain in inversion. And I think, though, the move higher in yields and just how sharp it has been, I think sort of raises some questions here about what the bond market is pricing in and the disparity between what the equity market is pricing in. Even though it is a down day, there's been a pretty significant divergence here over the last few weeks.
And indeed of time frame, how much have everyone said, look, recession not for 18 months, you can still catch, well, some pretty significant upside to stocks in that interim period. Meanwhile, though, what does inflation do to all of this? I think it's really important that Rael Brainard was out there trying to talk about the unequal impact of such inflation, who it hurts the most. And of course, this is why the Federal Reserve is taking it so seriously.
Well, and I do feel like there's always a caveat with a lot of these Fed speakers that, you know, there's also that risk to downside growth. I want to go back to what Romaine said about like factoring in. And I think, again, the markets, right, have had that bounce back because they've factored in those aggressive rate hikes by the Federal Reserve. But again, now we're getting more specificity about what we might get in terms of the balance sheet moves. And maybe that hasn't been factored in yet.
And there's a question.
Certainly on the equity side.
Right. And when we talk about how aggressive the market has been in pricing it in, there's now some significant debate out there as to whether the market pricing hasn't been aggressive enough.
You know, Mary Daly had some really interesting comments earlier today. She said that inflation is as bad as not having a job. And that was pretty surprising for me to hear.
Well, of course. But I mean, look at it. I mean, how much have we been talking about the wage growth and the idea that as impressive as those numbers are on their own, they're being outstripped by inflation. So did you get a raise if you only got a 5% one?
Right.
Not really.
Well, probably not. Interesting, Tim, those comments. I think we heard from Seth Carpenter over at Morgan Stanley 4 weeks ago. I know that my TV team will correct me there if I'm wrong on the timing, but he did say a recession is by far much worse than some of the inflationary impacts, and that's the last thing really that you want to do that would hurt people much more. So certainly weighing all of those risks.
Yeah, but I still think, I mean, it's what a striking comment that inflation is worse than actually not having any income. I mean, we do talk a lot about the resilience of the American consumer. We were just talking to the president and COO of Mattel earlier today. He's confident that, you know, the American consumer can actually take into account these price increases for Mattel toys. And cruises, yes, having their best week of bookings ever. Yeah, you're absolutely right.
Hey, just going back to Mary Daly, just for a quick check, she said there are more challenges for the rest of this year, but we are seeing green shoots for improvement on supply chains. I know. Ben Bernanke, right? Kind of coming back to life.
They just have like a book there at the Fed with like all this sort of euphemism.
Ton of phrase.
Yeah. Who's going to use green shoots this week, right? Anyway, but that could help bring down prices.
The punch bowl is being taken away, Romaine.
No, okay.
Okay.
That is what the bond market is trying to say.
We got to run. We're going to have more. We're going to be back in less than an hour's time. We're going to count you down to the close with Beyond the Bell. It is our simulcast, cross-platform coverage on radio, on TV, and YouTube. We will count you down to the close on this Tuesday.
This is Bloomberg Business Week with Carol Masser and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
I'm going to say, too, we're going to get back to our TV colleagues. Joe Weisenthal, his column, 5 Things That You Must Read.
Read it every day.
But he talked, too, about how we think about inflation generally monetarist in its logic. So thinking the Fed can do something, but he said, what if we kind of think about bottoms up? You know, what if Americans have finally bought enough stuff? What if a shift to services spending eases the pressure on goods in a way that helps bring down inflation? What if the White House is able to induce more domestic oil production? These are things that would bring down inflation. So it's just, there's a lot of things we keep saying it's the Fed, but there are a lot of other factors at play that from like a bottoms up thinking could impact inflation that's out there and maybe mean the Fed doesn't have to be so aggressive.
That's why we have to really dig beyond the headline numbers when we see these. But I think the shift to goods or the shift to services rather than goods is a good one to think about when, as the pandemic, as we get to the other side of the pandemic. At the same time, the oil and energy increases, Carol, they're so pervasive and they hit everything that I wonder, how quickly people can get beyond those.
But his point is like inflation deceleration by mechanical things in the economy.
Yeah.
And I hear what you're saying in terms of energy prices, but there's a lot at play so that maybe you still have higher energy prices, but other things come down. I don't know. It's a lot of stuff out
It's
there.
a good point. Let's get to Washington, D.C. for world and national news. Nancy Lyons is standing by. Hey, Nance.
Thanks, Tim. Ukraine President Volodymyr Zelensky is pleading for world leaders to take action against Russia for its invasion of his country. Speaking through an interpreter, Zelensky told the United Nations today that Russia must be held accountable for violations of international law.
The Russian military and those who gave them orders must be brought to justice immediately for war crimes in Ukraine. Anyone who has given criminal orders and carried out them by killing our people will be brought before the tribunal.
Zelensky says the UN needs to be reformed if it cannot restore peace. Former President Barack Obama was on familiar turf today, returning to the White House for the first time since leaving office in 2017. He was there to mark the 12th anniversary of the Affordable Care Act that was passed during his tenure.
When President Biden said he was not going to just celebrate the ACA, but also announce actions that would make it even better, I had to show up.
Obama started his speech jokingly referring to Biden as vice president. President Biden is closing a loophole in the ACA that prevents millions of Americans from accessing subsidies for their monthly insurance premiums. Golfer Tiger Woods says it's looking like he will be able to tee off at the Masters Golf Tournament in Augusta, Georgia this Thursday. He says he feels like he is going to play. It would be his first major event since the 2021 near-fatal car crash that nearly cost him his leg. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries.
All right, Nance, thank you so much. Carol Massar, along with Tim Stenovic. It's the story that keeps on giving.
We're talking Elon Musk and Tesla, of course. So yesterday we woke up to the news that he had amassed a more than 9% stake. He did those purchases, by the way, on March 14th.
Excuse me, Tim, that was a passive stake.
It was a passive stake.
Not so passive,
At least, yesterday. Today, though, it's become an active one as we learned that he is now has been offered a seat on the board.
Yeah, exactly.
Twitter's stock is up more than 50% since he made those purchases on March 14th.
It's like the Elon factor, right?
Unreal.
Like he's stirring up the pot. He's stirring up things quite a bit for Twitter at this point.
He needed the money. So it's good that the shares of Twitter
That's what I always like about you, your
higher.
sarcasm that's out there. So listen, 24 hours after revealing he has acquired that 9.2% passive stake in the company, he put it out there, Elon Musk, and asked Twitter users, I wonder if did he do a Twitter poll?
I don't know if he did a poll.
Okay. So he asked them, I don't think he did.
I guess he did. Maybe he did. Let me look at the tweet.
All right. So he asked Twitter users whether they wanted an edit button offering misspelled yes and no options in his usual eccentric style. The billionaire had posted.
Okay, it was a poll.
had posted recently. Okay, good. About what he views as shortcomings of the service, where he has more than 80 million followers and has filled the void left by Donald Trump as one of the most influential accounts. So it was a poll, huh?
Yeah, 3.981 million people have cast a vote, and whoever was logged into this computer, I just did. Whoever's logged into Twitter, so I just voted for you. Whoever was sitting here before, I'm sorry.
I have to vote now.
It's 73.5% voted in favor of an edit button, and 26.5%.
Do you want an edit button?
Yeah, I do. I sent a tweet yesterday about this. Actually, not about an edit button, but I sent a tweet that showed who the largest shareholders in Twitter were, and I had a typo in it, and the tweet went viral, and it's linked to in the New York Post now, and now I have this typo. Well, they linked to it, yeah, and now I have this typo tweet that's living forever. So good job for me, right?
Hey, listen, no news or no press coverage.
I need an editor.
All press coverage is good. It's just interesting. He's already stirring it up, and as you said, the share price, investors are noticing because I think they're curious about what is he going to do for this company. All right, you're listening to Bloomberg Radio.
updates, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World headquarters, I'm Charlie Pellet. A Tuesday tumble with the Dow, the S&P, NASDAQ 100 index right now at the worst level of the day. Let's head right over to the First Word breaking news desk for today's afternoon call. Here he is, Bailey Lipschultz.
And good afternoon, Charlie. As you said, stocks are falling and actually trading at the lowest level of the day as traders weigh hawkish Fed commentary. The Dow is down 250 points, S&P lower by 50, with the NASDAQ down 325 points. The U.S. 10-year yield is at 2.54%, and small caps are lower by 20 points. Seven of the 11 main S&P sectors are trading lower, with consumer discretionary and tech as the worst performers, while utilities and real estate are leading to the upside. NASDAQ Biotechs fall 65 points, transport slide 2.5%, semis drop 150 points, while the VIX is higher by 11%. Leaders in the Dow, United Health, J&J, and McDonald's, while Boeing, Salesforce, and Disney are the worst performers. Twitter named Elon Musk to its board of directors, sending shares up as much as 9%. And in deal news, Change Health and United Health rallied after extending a merger agreement to December. Cruise stocks are outperforming after Carnival recorded its busiest booking week ever. And wrapping things up, Moderna fell after the African Union and COVAX declined to buy more COVID-19 shots. Live from the First Word breaking news desk, I'm Bailey Lipschultz. Charlie?
All right, we thank you very much, Bailey. And to hear live breaking news over your Bloomberg Time Squawk SQUAWK on your terminal, I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, folks. Yep, we keep talking about this story. And as we said, so much for being passive. I got to say, ARC's Kathy Wood, when she was talking with us, called it yesterday on air that 9.2% position in Twitter by Elon Musk didn't quite feel very passive. And as we've talked about, Elon now, right, I guess getting or possibly a board seat.
Got it.
He got it, right?
It's in. Yeah, he's got it.
It's done.
Next stop, what is it? CEO? I don't know.
Mandeep
Singh is Senior Tech Industry Analyst at Bloomberg Intelligence. He's with us in the Bloomberg Interactive Brokers studio. Mandeep, so we went from a passive stake, granted he is the largest individual shareholder of Twitter, to a board seat in just 24 hours. What are the changes that Elon Musk could bring to Twitter?
Well, so right now, the way we are looking at it, there are two possible outcomes, and really they're limited in the sense that either the company executes on its top line, that top line acceleration, which hasn't happened for the last 4 or 5 years, and investors have been calling for changes. They are on a timeline here in terms of showing that performance, that acceleration in top line, or this company goes private. And there are...
Twitter goes private?
Twitter goes private. There are scenarios you can paint in terms of how they could go private because, look, they've been shopped around in terms of Disney evaluating a potential takeover and Bob Iger admitting, how he pulled out at the last minute. And Salesforce, they were a potential bidder at one point too. So I don't think it's going to be a public company that goes for Twitter, just because of antitrust issues for some of them. And so it will likely be a private equity consortium, but in terms of the current...
This is a $40 billion company right now, so that would be a
the
big...
price tag would be at least $50 billion if I had to do a rough math.
That's a lot of money, even in today's environment,
you had Microsoft Activision deal at $68 billion this year, so...
But that wasn't a private equity deal.
No, but the point being that the deal sizes are going up. And, you could argue if Twitter is a slow growth company where private equity can come in and improve the operations and, help generate cash flow, this is pretty much in their playbook. Now, if Twitter can sustain or show that they can, grow top line north of 25, 30%, which is what Facebook has done over the years. Snapchat is doing right now, if you look at their trajectory. Twitter needs to step up that top line growth, and they have the engagement. It's not a question of engagement. They have the engagement. They need to improve the user base, showing that trajectory that they can expand the user base. And beyond that, they have to bring in more advertisers. So clearly, it's all execution driven. The challenge they have is the current management, which was appointed by, Jack Dorsey before he left the company. I don't think Elon Musk has faith in, Parag Agrawal executing on it. And that's where I feel there could be more management changes here. Like the time that Parag has to show that operational improvement, we're talking about a quarter or two here.
Wow. There's 9 buys on the company, 29 holds, and 4 sells. So Street, still likes it, but not overly maybe aggressive. So wait, help me understand something. So we all talk about Twitter. It's such a part of, I feel like our culture, whether you're a business leader or you're just an average Joe like we are, you're in the media or whatever.
Whether you're a journalist in New York or whether you're a journalist in LA, it's part of your culture.
Relatives who are on it who, so it's interesting that we all kind of are into this platform. So you talk about, so it has to grow its user base, get more advertising, and are there costs that can be taken out of this equation?
There are, but look, when you are a growth story, and that's where the quality of the management really matters.
It's been a growth story for a while, I feel like.
But it hasn't been. The peers like Facebook, at least until this year, Snapchat, they were growing north of 35, 40%. Twitter was growing less than 20%. So it makes you wonder, what is it that they can't do in terms of the ad side, and why can't they?
What do you think is the problem?
The problem is their ad products aren't mature. And in terms of just using that engagement, look, the digital ad world is all about personalization and showing the right ad when you have the user. Twitter wasn't doing that. They were just a brand advertiser who was showing some ad when I was browsing through Twitter. It wasn't relevant.
I get ticked off, though, because I feel like it's a forum for conversations.
Well, but at the end of the day, how else are you going to bring in more advertisers? So YouTube is the perfect comparison for something that Twitter is trying to achieve. YouTube has a subscription product. It also has an ad product for somebody who wants to use it free.
Yeah.
And Twitter should have been able to do something similar. For people who don't want to see ads, they should be, paying $5 a month or something like which they have launched now. So the new CEO has been aggressive with these product launches, Twitter Blue, Twitter Super Follows. But the point being that they're way behind, YouTube in terms of even addressing the kind of the controversy you see in terms of the comments that people have on tweets. And,
Does this mean yes or no, Trump's coming back to Twitter?
I think if I had to attach a probability, 60 to 70% probability he is coming back.
God, what a fascinating story. Mandeep Singh, thank you so much. Our senior tech industry analyst at Bloomberg Intelligence, right here in our Interactive Brokers studio. You are listening to Bloomberg Business Week on Bloomberg Radio.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
All right, you are listening to Bloomberg Business Week on this Tuesday. Just got about 29 minutes to go here.
Yeah, in a couple minutes, we're going to be speaking with Kriti Gupta. She's got our chart of the day. The Dow Jones Transportation Average is what her focus is.
I was just kind of setting up for our market chat with our TV colleagues.
You were looking at it?
That's exactly what I was looking at.
Oh, well, that's perfect.
We'll be nice and primed for it.
Well, in the meantime, let's get a check of the trading day. Here's Charlie Pellet.
Very much. We have got 29 minutes to go ahead of the closing bell. Dow Transports right now down 2.7%. Russell 2000 down 2.2%. NASDAQ 100 index down 2.4%. The Dow, the S&P, NASDAQ trading at or near session lows. S&P is down 58, a decline right now of 1.3%. The Dow is down 284, down 0.8%. NASDAQ now extending its losses to 343 points. NASDAQ is down 2.4%. Equities and bonds fell as traders weighed hawkish Federal Reserve commentary and a new round of potential sanctions on Russia. The 10-year yield, 2.53%. The 2-year yield, 2.50%. Spot gold is down 0.5%, $19.23 the ounce, while West Texas Intermediate crude is down 2.6%, $100.64 a barrel. Two buyers of COVID-19 vaccines for low and middle-income countries have declined options to purchase hundreds of millions of additional doses from Moderna, a sign of waning demand as the pandemic eases. Moderna shares down now by 6.4%. The African Union and COVAX, the World Health Organization-backed group, decided not to obtain more of the vaccine as developing nations struggle to turn supplies into inoculations. One question on the minds of many Americans: when might we see a winding down of screening for COVID? That question this morning for Dr. Amish Adalja, senior scholar at the Johns Hopkins Center for Health Security.
I think that's really going to be organization specific. Many organizations are very allergic to having any cases of COVID-19, even mild cases in a fully vaccinated population in their organization. So they continue to do that. But in general, if you're symptomatic, I think you should be tested because you might qualify for antivirals or monoclonal antibodies. But I think asymptomatic screening of employees, asymptomatic screening of students at college campuses, cruise ships, all of that has to go away eventually as we manage this more like influenza and other respiratory viruses, and then really reserve testing for symptomatic individuals.
Dr. Adalja with the Johns Hopkins Bloomberg School of Public Health, which is supported by Michael R. Bloomberg, founder of Bloomberg LP and Bloomberg Philanthropies. Pfizer shares right now are trading higher. They're up by 0.4%. Its German partner BioNTech, its shares lower by 2.8%. AstraZeneca up 0.6%. Moderna, as we mentioned, down 6.4%. Johnson & Johnson up 0.9%. Again, recapping, S&P down 58, a drop of 1.3%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Thank you so much for that update, Charlie Pellet. Well, as we do each and every day at this time, we check in with Kriti Gupta, markets correspondent for Bloomberg TV and radio. And she shares with us her chart of the day. If you still don't get Kriti's chart of the day, all you got to do is send her an email, kgupta129@bloomberg.net. Check her out on Twitter and Instagram. You can do that at Kriti Gupta News. Chart of the day today, Kriti, it's a two-way street. It focuses on the Dow Jones Transportation Average, which, as you may have heard, Carol has been digging into as well.
I have been. It was so funny when I was just looking at it. So anyway, tell us what you got. What's jumping out for you?
Yeah, well, this was a very controversial index in that a lot of people are saying, you shouldn't even worry about what the Dow is doing. It's really all about the S&P 500. But there are a lot of people who look at the Dow Transport Index as kind of this forecaster or crystal ball for what's going to happen to the Dow. It's classic Dow theory, or the S&P 500. So traditionally, if you were to overlay the Dow Transport Index and the S&P 500, they kind of move together. So right now what's happening is the Dow Transport Index, which includes railroads, shippers like FedEx, UPS, airlines are in there. I think Avis is in there as well. It's actually lost, I think, about 10% in the last 5 sessions. But the S&P 500 hasn't dropped by the same margin. The Dow hasn't either. So a lot of people are saying, well, the transport index drops, well, then the S&P 500 is next. So for the people who are waiting for that bear case to really kind of play out in the stock market, they're pointing to this indicator. But like I said in the subject of my email today, it is a two-way street. There are two sides to this argument. So I'll start with the bear case, because that is what a lot of people are using this for. Our macro strategist, Cameron Kreis, crunched the numbers on this, and I really can't say it any better than him, but he compared the relative performance of the S&P 500 and the transport index. And he said the biggest move that you saw last Friday, which is if you look at the chart, one of the steeper moves downwards, was actually one of the seventh worst day since 1928 compared to the S&P 500. He said, if you look back at history, the other times this happened, it's happened at, the collapse of Lehman Brothers that happened after 2001. It happened at these very historical, traumatic moments in market history. So that's kind of the bear case, right? That this is going to be the crystal ball to something going wrong in the stock market. Let me give you the bull case, because this is Dan Curtis, our producer, our markets mastermind. He also crunched the numbers in a different way. And he said, since 2010, if you look at how much the index has fallen, over 5% in the span of 1 week, that has only happened 124 times. 85 of those times, and don't worry, I'm going to simplify the math in a second, 85 of those times, the S&P 500 was higher a month later. So simplifying all of that, 66% of the time since 2010, when the index has dropped by this much of a margin, the S&P 500 a month later have actually rallied. So there's a lot of data to support both the bear case and the bull case in terms of what the trends are. But at the core of it, you really need to know that this is an index that is used as a proxy for economic activity. Think about it. If you're shipping, if you're flying, if you're using railroads, it means the economy is growing. It means there's demand. And right now, that's not what the market is pricing in when it comes to this index.
I guess what's trickier is, too, I'm thinking about is we've become more of a supply-side economy. Now, mind you, you need goods shipped around to support that supply-side economy, but I do wonder if it's not as goods dependent as it used to. And maybe that's why we do see a month later, transports coming back, or, so, it's a tricky time right now. And I feel like looking at the Dow transports, Creedy is we're kind of groping for some indication of ultimately what is life like coming out of truly this pandemic, right? And we just don't know yet.
Yeah, and I think you nailed it here, right? Because at the end of the day, a lot of the concerns are, can you ramp up logistics to keep up with this kind of demand that's been shut down in 2020? And one of the concerns is that you can't, and especially when you start to talk about demand destruction and decelerating growth. That's the sentiment that's reflecting in the stock market. One of the criticisms of this index is that, one, this is a price-weighted index, not a market cap-weighted index, the way the S&P 500 is. So maybe some of these fears are being priced in a way that isn't taking into account some of the actual numbers on the ground. That's one of the criticisms. But at the end of the day, Carol, I think you nailed it. This is really coming at a point where we're saying, are we headed for a recession? Are we not? And this index is really a proxy of that potential.
Right. And are we done stockpiling toilet paper and everything? We've just been buying so much stuff. And a lot of folks have been saying, do we go back to buying more at historical levels versus the pandemic levels? Creedy, we have to leave it there. Great chart. Her chart of the day at kgupta129 at bloomberg.net. And check her out at Twitter and Instagram at Creedy Gupta News.
To Nancy Lyons, we go to Washington, D.C. for a check of the latest world and national news. Hey, Nance.
Thanks. Ukrainian President Volodymyr Zelensky, in an address to the UN Security Council, says it's crucial Russia must be held accountable for war crimes. He spoke a day after visiting the city of Bucha outside Kyiv, where he says Russian troops committed genocide.
The Russian military searched for and purposefully killed anyone who served our country. They shot and killed women outside their houses when they just tried to call someone who is alive.
President Zelensky is calling on the UN to live up to its charter and do more to support Ukraine. Presidents Biden and Obama joined a ceremony at the White House this afternoon on the 12th anniversary of the landmark health insurance law, both calling for even more comprehensive coverage.
President Obama summarized the achievements of his administration.
Nothing made me prouder than providing better health care and more protections to millions of people across this country.
Both presidents recall a tough slog to enact the law over total Republican opposition.
The Affordable Care Act has been called a lot of things, but Obamacare is the most fitting. Obamacare.
A proposed rule change would further subsidize insurance for low-wage workers. Nearly 1 million Americans will see their coverage become more affordable. President Biden signed an executive order promising still more improvements. In Washington, Irv Chapman, Bloomberg Radio.
The House panel investigating the January 6th insurrection is turning its focus more to former President Trump's inner circle. Those familiar with the matter say Trump's daughter Ivanka is set to testify next Tuesday. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts.
All right, Nancy, thank you so much. You're listening to Bloomberg Business Week. Carol Massler along with Tim Stanovic here in our Interactive Broker Studio. A couple of stories that I'm getting ready for a conversation at Bloomberg Live Wealth, and it's with the president of the New York Stock Exchange, and Catherine Keating over at BNY Mellon.
When do I get to see that? That's
next
cool.
Thursday.
Can we play some of it on Bloomberg Radio?
We will. Thank you. Deep tease there.
I would like to.
Thank you, partner. But also getting into the volatility of the market and just the different factors at play, whether it's so much money out there, courtesy of private equity, and then you've got SPACs. So there's a couple stories on the Bloomberg that play into both of those.
What's interesting is we've heard so much over the last year about the record raises that private equity firms have done. Check out this story, Carol. Private equity competition to raise money around the world is overwhelming investors, leaving some firms falling short of their funding goals. That's according to Baring Private Equity Asia Chief Executive Jean-Eric Salata. Salata's company is being acquired by Sweden's EQ2, and one of the biggest deals of its kind, said that a combination of public market drops, the war in Ukraine, and too many private equity players trying to raise money simultaneously was leading to the funding squeeze.
All right, and there's also a story about SPAC issuance. We'll get to that, but I got to mention a headline just crossing because we're seeing some movement in share prices. JetBlue making a $3.6 billion offer to buy Spirit Airlines. This is coming from the New York Times, just crossing, again, a $3.6 billion offer. Shares of JetBlue right now are down about 6%, and just looking for Spirit Airlines, I would assume, as the target. Let me pick it up here.
Save US.
Yep, is the ticker, and the stock right now, it is halted, and that makes sense because of this news. This is a big deal, and JetBlue, one of the newer entrants, if you will, in the airline industry, but it's getting to be an older player and maybe looking for...
It doesn't feel new anymore, right? He really did shake it up. We're talking David Needleman years ago, right? Someone you and I have both spoken to years ago. Really shook things up, but a lot of other airlines are doing that too.
Yeah, and maybe there's some economies of scale by consolidation. Again, Spirit is halted. It was up 7% ahead of this news, but again, JetBlue making an offer for Spirit.
minutes, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Tape. This is a Bloomberg Business Flash.
Bloomberg World Headquarters. I'm Charlie Pellet. We begin with a developing story. Headline from the Bloomberg Professional Service: JetBlue making a $3.6 billion offer to buy Spirit Airlines. This, according to the New York Times, potentially spoiling Spirit's merger with Frontier. Right now, we do have JetBlue shares tumbling 6.6%. Trading halt on Spirit Airlines, last quote, up 22.4%. Frontier is trading higher now by 0.4%. Again, repeating the headline from the Bloomberg Professional Service: JetBlue said to be making an offer to buy Spirit Airlines. This, according to the New York Times. Stocks lower, 12 minutes to go ahead of the closing bell. The Dow, the S&P, NASDAQ, all declining. Traders weighing hawkish Federal Reserve commentary on a new round of potential sanctions on Russia. S&P down 64, a drop of 1.4%. We've got the Dow down 327, down 0.9. NASDAQ down 353, a drop there of 2.4%. 10-year yield 2.54%, 2-year yield 2.50%. Spot gold down 0.5%, 19.22 the ounce. West Texas Intermediate crude down 3.1%, $100.12 a barrel. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Thank you so much for that update, Charlie Pellet. It's 3:48 on Wall Street.
The following is an editorial from Bloomberg Opinion.
This editorial was written by the Bloomberg Editorial Board. The U.S. government has long offered enticements to get Americans to save for retirement. Why, some might ask, should it be involved at all? There are two answers. First, people turn out to be pretty bad at thinking about the distant future. It seems our brains aren't wired for it. Second, the financial choices involved in retirement are uniquely complicated. Encouraging people to save more and helping them do it wisely would make a lot of Americans better off. But in recent decades, the U.S. system of retirement savings, such as it is, has shifted sharply toward an ethos of personal responsibility. As a result, nearly half of workers nearing retirement age lack retirement savings. The government should be doing more to steer Americans toward better choices, both for their own financial security and for the public good. This editorial was written by the Bloomberg Editorial Board. For more Bloomberg Opinion, please go to Bloomberg.com/opinion or OPIN Go on the Bloomberg Terminal.
This has been Bloomberg Opinion.
I'm driving in my car.
How about you let me drive?
Oh, no. Who's gonna drive you home? Honey, please, I'll do the driving. Drive on. Excuse me, I want to drive. It's the question that drives us.
This is the Drive to the Close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
All right, everybody, just about 10 minutes left in the trading session, and lo and behold, remember we had a pretty hot M&A year last year, and we're continuing to see stuff happening. Just to rehash, we heard from Charlie, Spirit Airlines making an offer, or getting an offer from JetBlue, a takeover offer, and we're seeing shares of Spirit up about 22%. It is a $3.6 billion offer, and again, this is from the New York Times.
Yeah, that offer is a roughly 40% premium over the offer that Frontier had made in cash and shares to buy Spirit. JetBlue shares, by the way, are down just about 8%.
Yeah, no surprise there, right, as the potential acquirer. All right, let's get to it. It's a different market day. We heard Carolyn Hyde, one of our TV colleagues, saying very different kind of from what we had yesterday. So let's see what our guest has to say about the current environment, because we have stocks pretty much at their lows. Anu Gagar is back with us, global investment strategist for Commonwealth Financial Network. She is once again with us on the phone in Waltham, Massachusetts. Hey, Anu, nice to have you here. Had a bunch of Fed speakers out there, Esther George, Mary Daler, Lael Brainerd, and they seem to be pretty aggressive, or at least some of them, when it comes to what we might get out of the balance sheet in terms of reductions on that, specifically come that May meeting. And that has put pressure on both the equity trade and certainly the fixed income treasury market trade. How does that factor into your market projections if we start to see more aggressive moves on the balance sheet?
Carol, thank you so much for having me. Great to be back here today with you. So you are correct. The market is pricing in a more hawkish Fed, which includes not just rate hikes, but also a more aggressive balance sheet normalization process and likely more sanctions imposed on Russia with the derivative impacts felt in the commodity markets and in inflation globally. And what we're seeing with the Fed, with the more hawkish Fed, is we saw the yield curve inverting earlier this week, last week. So the yield curve seems to be signaling upcoming recession. And
is it productive to keep having this recession talk? I feel like at this point we all know that at some point we're probably going to get a recession. It might be a quick one. I mean, come on. No, you don't think so?
No, I completely agree with you. I mean, look at the last recession that we predicted. It predicted it in 2019, but the only reason the recession happened was because of COVID, which was not something in 2019.
Right. So is it at this point, is there a more constructive conversation to have than are we or not going to have a recession?
You made a great point, and we actually do need to take a more holistic perspective on the inversion and also separate the correlation from the causation. So historically, there is about an 80% probability that a yield curve inversion is followed by a recession. And that is a strong correlation and explains why the market is so volatile. But the inversion in and of itself does not cause a recession. And it does not give a good sense of the timing for recession.
So what would cause that? So it's not the inversion, right, that causes the recession. Yeah. What would cause our recession?
So to assess that, we need to look at the other economic data points. And what we're seeing right now in the economy, it's on a very strong footing. There are more job openings than people looking for employment. The wages are growing, consumers are spending, companies are growing earnings, and most importantly, household and corporate balance sheets are quite strong. So yes, as you said, recession risk, it might happen. It's an economic cycle. It goes up, it goes down. So recession risk has risen, and we have likely passed mid-cycle and possibly heading into late cycle. But this part of the cycle could last for as little as 6 to 7 months and as high as 3 years before we hit a recession.
So we could technically be out of it, and then we'll get the reports of, hey, folks, we were in a recession, right?
Yeah, that's right. It could be just a shallow recession.
Yeah.
Okay, so how does our investing audience play the next 6 to 12 months?
Yeah, so it is important to note that even when the yield curve inverts, it's really a poor signal for getting out of risk assets such as equity, because late cycle is not the same as end of cycle, and equities can continue to offer positive returns. In fact, in the last 6 episodes of yield curve inversion since 1975, global equities have in aggregate risen in the 12-month period after the inversion. But of course, under the surface, there are shifts in leadership, and that's where we need to focus.
Well, Sue, and that's a really good point. And I think maybe that is, and I know certainly we do this with our TV colleagues in Beyond the Bell, in terms of constructive conversations about, sector rotation, market rotation. Like we can see that will still provide some momentum for the equities, but it's not just an all-in rally.
That's right. So returns generally have been weaker in the post-inversion period. When we start looking at how to rotate, defensive sectors have typically outperformed the cyclical sectors in the 12-month period after the 210 inversion. And this should make intuitive sense, because if we are nearing late cycle, equities are probably expensive. Corporate earnings have peaked. We are already looking at earnings expectations for Q1 2022 of about 4.7%, which is much lower than what we've seen in the last several quarters. And the Fed is raising rates. So all of these factors can dampen equity returns. Also, so basically what I'm saying is you have to be more defensively positioned. And also, if you look at U.S. versus non-U.S., U.S. equities in aggregate look more attractive than non-U.S.
All right. It's tricky. Hey, Anu, always feel like we have a very thoughtful conversation with you. So thank you so much for coming on. Tim and I were both jotting notes.
Yeah, furiously typing.
Pretty frantically. Our drive to the close with Anu Gagar. She is Global Investment Strategist over at Commonwealth Financial Network, back with us on the phone from Waltham, Massachusetts. And with that, we've just got about 3.5 minutes left in the trading session. We're bouncing off our lows of the day, but we are down across the board, and most heavily, in contrast to the rally we saw in tech yesterday, we are seeing tech down in a big way, down about 2.3%. And we've got the S&P 500, the more broader market, down about 1.3% as well. All right, coming up next, we're going to talk about the markets, Tim and I. We're going to be joined by our Bloomberg TV team for Beyond the Bell. It is live on Bloomberg Radio, Bloomberg TV, and YouTube. We're going to be counting you down to the close on this Tuesday. And again, we're pretty much at our lows.
On the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostic, Caroline Hyde, Taylor Riggs counting you down to the closing bell. Here to help take us beyond the bell. It's our global simulcast partners, Carol Massar, Tim Stenivek. We welcome in our audiences across Bloomberg Television, radio, and YouTube. And Carol, all the gains we saw yesterday, gone today.
Yeah, right. A new day and certainly a different trading modality, if you will. But what's interesting is, and I love when that headline crossed about JetBlue making an offer for Spirit. New York Times reporting this. We saw Spirit take off in a big way. It's just a reminder, though, that corporations are willing to put takeover offers out there. And that, to me, is one of those stronger sentiment signals about maybe what's going on in this market.
Yeah, and quite the premium on that takeover offer as well. Romaine, you said the gains from yesterday evaporating today. Tech really taking the brunt of it. The NASDAQ and NASDAQ 100 both having their worst day since March 7th. So just about a month.
Yeah, only Twitter getting a little bit of love. Always get that idiosyncratic news coming from Elon Musk taking a board seat. But overall, this is a unwinding. And once again, the reasoning is all about the Federal Reserve, all about central banks tackling inflation and at a hefty clip, whether it be 50 basis points raise that we get from that exclusive conversation with Esther George, or whether it's more of what we do with the balance sheet and how quickly we act to tighten that, Taylor.
And really interesting, we heard from Eddie Perkin, of course, over at Eaton Vance for our radio audience, and sort of wondering how you make all of this work. You can't just all of a sudden have a $9 trillion balance sheet and then flip the switch and decide to raise 50 basis points at 3 or 4 subsequent meetings, and suddenly all of it, everything is okay.
Yeah.
It's going to be tougher than we think it may be.
Yeah, and I think all this is really going to come down to some of the trends we see in consumer spending, whether they hold up or not. That will be a big determinant of where this market goes beyond today. As for today, the Dow Jones Industrial Average lower by about 0.8%, 270 points or so. The S&P 500 down roughly 57 points, or about 1.2% here on the day. The NASDAQ, one of the biggest underperformers here on the day, down about 2.3% here on the day. And the Russell 2000 down about 2.4% here, as pretty much everything tied to this economy, at least in the broader macro sense, getting sold here. Only a few of the idiosyncratic stories to the upside.
Yeah, and continue to keep an eye on those transports. I know it's something that we've all talked about, down another 2.8% on the Dow transports. And so we have seen a significant drop in the last couple of days. Whether this is a sign of a potential slowdown in the economy, guys, or is it just a case of we're going to all stop buying so much stuff and we're going to get back to kind of historical, numbers when it comes to spending. And so that means this group has got to kind of recalibrate a little bit.
Well, what do you mean by stop buying stuff? Is it because we want to or we have to?
Well, I don't know, but...
Or maybe we have the stuff that we need, and that shift that we saw in consumer spending from services to goods goes back to services.
Maybe we're spending more on services, so we're not spending so much. I mean, we are above historical levels when it comes to spending. Do we really think that that's going to continue longer term? And so that could certainly play out in the transport sector.
It really is interesting, Carol, as we think about some of the big movers on the day for the radio audience, the sector winners, maybe here the sector losers. It's household products and food and staples. As you think about the stuff that we're buying, was only one of the 2 out of the 4 sectors in the green today. It's utilities, pretty defensive move despite yields rising. So really interesting price action, at least up at the top. Pretty much everything else is in the red from a sector standpoint. Carol, I'll bring you down to the bottom of the screen, and it really does feel risk off. off, right? When you think about auto components, semiconductors, that transportation index that you highlighted, technology, hardware, those are off anywhere from 2.25% to about 4.8%. So big rotation out of technology today.
Yeah, no risk off when it comes to shares of Twitter. We know they were up 27% yesterday. Now another 2% added on that gain today. So one of the outperformers, we know the story. Elon Musk, his passive investment, not so passive, getting a board seat and continuing to really play around in this company. So that's getting investors' attention. Wanted to mention RH because Gordon Haskett's check Rome out reiterating his accumulate rating on the company and suggesting that the CEO's sale of about 1.7 million shares of the company paves the way for an aggressive buyback campaign. There's more in that research, but nonetheless, you did see investors taking notice of that, and that was up about 7%. Meantime, Spirit Airlines, got to point it out, we saw the trading halt because of that news coming from the New York Times about JetBlue making an offer for this company. But nonetheless, interesting to see what airlines in play.
And we just, on Bloomberg Television, we just talked with Bloomberg Intelligence's George Ferguson about this. He raised an issue, too. I mean, because we know Spirit had that deal with Frontier Airlines, but he kind of raised the issue that these are two companies with pretty different cultures when it comes to Spirit and JetBlue.
It's funny that you said that because Tim and I were saying about kind of maybe just how JetBlue, remember when they were the upstart and they were doing it so differently? They're kind of an older airline at this point. And I do wonder if they're looking for a new revenue line at this point and somehow finding or thinking about economies of scale.
Have you ever flown Spirit? That's it's night and day from JetBlue.
Right. Well, I know, but JetBlue has also changed from its origins a little bit.
Yeah, true.
Okay. It's not the same. I get your point.
Well, Spirit certainly finishing higher on the day. Different story for JetBlue. Oftentimes what happens when we see deals like this or potential deals like this announced, the acquiring company does move lower. No exception for JetBlue, finishing the day down by 7%. Also keep an eye on shares of Tesla. Yesterday, Tesla did finish higher by 5.6%, so giving some of that gain back among the worst performers in the S&P 500 on a points basis today. And then also watching shares of Starbucks, finishing the day down by 4.5%. Yesterday was Howard Schultz discontinuing that stock buyback plan. Today, Wedbush cut its recommendation from outperform to neutral, cut its price target from $105 to $91, citing a lack of catalyst for the, quote, foreseeable future.
Ouch. Meanwhile, let's have a look what's also on the downside. I tell you where there is a catalyst and what is getting people to perhaps hedge a little bit is over in Europe. Remember, we do have not only a war that we keep an eye on, but also political change, potentially political, certainly elections in France, that suddenly people are getting a little bit more nervous about how tight the run between Macron and Le Pen could be over in France. We're seeing the euro down 0.6%. Yes, that's as we see a stronger dollar, but it's also as we potentially see people starting to protect themselves to the downside and what could happen to the euro if we did see some sort of shock occur over in France and its political system. I'm looking at the Aussie dollar on the higher side. This is we see the central bank there, Australia, really focusing in on having to tackle inflation too. We've had, of course, talk here in the US, hawkish sentiment coming from the Federal Reserve. Well, the Aussie central bank also having to talk tough about how quickly they raise interest rates to tackle inflationary pressures. The Japanese yen down once again. I mean, near 7-year lows, as even talk from their central bank head isn't enough to steady some of the sell-off in the yen, of course, as the Bloomberg Dollar Index pushes higher by 0.4%. That, of course, perhaps takes the wind out of the sails of the oil trade. We're off by 2.7%, even as we heard more concerns about potential sanctions heading from Europe towards Russia. WTI crude off by 2.7%, Brent crude off by 2.2%, that's $105 a barrel. We've seen nat gas push higher, up more than 5% as we're worried about the weather, the cold that could affect here in Easter in the United States. And lastly, I'll leave you what is a global sell-off in bonds. In Italy, yields up 17 basis points. In France, up 14 basis points. And over in Belgium, too. Europe really selling off hard, Taylor.
Same here, Caroline, with full faith in credit. Really big moves, of course, on sort of the long end of the curve. Quickly here for the 2-year yield. Think it's interesting. You see moves higher of about 11 basis points, but I've counted and you've had at least 8 days this year that have seen bigger moves. So sort of that front end volatility, today's perspective, nowhere near goes some of that. But you are seeing a lot of this volatility on the longer end too today, Carolyn. Today's sort of 16, 15 basis point move is the biggest one-day gain that we've had in yields since March 16th of 2020. On that day, you had a yield move higher by about 36 basis points. So really puts all of this volatility into perspective. We've really, though, been focused on that front end, given some of the big comments from the Federal Reserve about that balance sheet and big tightening coming our way.
All right, so 2 p.m. Wall Street time tomorrow, FOMC meeting minutes, Romaine. So I do wonder if we'll get more clarity about the balance sheet. Maybe we'll see what kind of debate was going on to see whether it supports what we heard from all of these women from the Fed today.
Yeah, and I mean, look, I mean, Powell has basically said that we're going to see some of that discussion. I guess the question is really how aggressive are they going to be with that? When you look at the comments that we heard, particularly, I thought, from Mr. George, I think it's interesting that we could potentially be looking at a Fed that is a little bit more aggressive than maybe what was already priced into the market, if you can believe that.
So at this point, is that already priced into the market after those comments today?
I just said no.
Right?
Are you listening to me?
Yeah. Okay. That's what I'm wondering.
Wait, did you say something?
I'm just joshing.
He likes a little mumble.
Yeah.
But I mean, we are seeing remarkable volatility and two disparate voices and viewpoints perhaps coming from the market, whether or not the equity market is
I have like
perhaps
this
a lot
song
more
in my
upside.
head right now, and I can't get it out.
Okay, do sing it afterwards. Tantalize.
Why not right now? Do we have the rights to it?
Caroline wants to be serious. Caroline,
do we have the rights to the song?
I want to be serious.
Do we have the rights? No. Thanks.
Well, Romaine singing it. Yeah, exactly.
Thanks for reminding me, because I was about to belt it out.
Meanwhile, we're all discussing which cruise we're all going to jump on next as a team and whether we can take a camera crew too. But
did you hear about this, Carol? Me, Caroline, and Taylor, we're going on a cruise together. 3 bunks. I get the middle bunk.
As long as he doesn't sing, I don't mind.
Isn't there like a reality show like this or something?
That's
we're cameras all along. We've approved
this. This is below deck Bloomberg.
Al has approved this. We're all signed off on, ready to go.
As long as it's not too expensive. There is some inflationary pressure that goes on with these troubles.
All right, I'm going to get serious like Caroline did. Anu Gagar over Commonwealth Financial, she said, you have to think about inversion doesn't actually cause recession. We need to think about what actually causes a recession. And she pointed to the things that show strength in the economy, whether it's the labor market, balance sheets, which I know you love talking about, Romaine, and also earnings growth. So we need to be smart about, yes, when we see inversion, we often get a recession, but it's not the inversion that causes the recession.
Yeah, good point.
Just going to say it.
And whether the earnings come out and start to back us up fundamentally, Carol.
Yeah, absolutely. I just want to know, did you take Spirit to France, Romaine?
No.
Does Spirit go to France?
No, I think it's really focuses domestically.
All right, guys, we got to run. We'll see you tomorrow. That'll do it for our cross-platform coverage on radio, TV, and YouTube. It is Beyond the Bell. We will see you again, same time, same place, on Wednesday.
You're listening to Bloomberg Business Week with Carol Messer and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
I just want to see them on the Lido deck. That's what I really want to see.
I don't know what that is.
Oh, come on. Did you never watch, what was the cruise ship? Love Boat? The Lido deck?
Yeah.
God, you're so disappointing.
I know. That.
Just when I thought you were perfect.
Let's get to world and national news. Nancy Lyons is going to save me. She's the 991 newsroom. Hey, Nancy.
Thanks. International intelligence shows Russia appears to be easing troops out of major cities like Kyiv and repositioning them in the southern and eastern parts of the country for another offensive. U.S. Joint Chiefs Chairman Mark Milley spoke today before a House Committee on Armed Services and says this could be a long war.
I do think this is a very protracted conflict. And I think it's at least measured in years. I don't know about decade, but at least years for sure.
Milley says even if the fighting ends, the U.S. will be involved in Ukraine for quite some time. Former President Barack Obama is marking 12 years since passage of the Affordable Care Act, returning to the White House today to promote the legislation. He admits it's taken time to catch on.
A lot of folks, including many who had initially opposed health care reform, came around. And today, the ACA hasn't just survived, it's pretty darn popular. And the reason is because it's done what it was supposed to do. It's made a difference.
Obama says 30 million people have received coverage under the ACA. The Biden administration is fixing the so-called family glitch, which excludes some families from subsidies due to how income thresholds are currently calculated. Tiger Woods says he's been practicing all week at the Augusta National Golf Course and says he's ready to tee off for the Masters this Thursday.
72 holes is a long road, and it's going to be a tough challenge and a challenge that I'm up for.
Tiger Woods has not played in a major tournament since a car wreck in 2021 that seriously injured his leg. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
All right, Nancy, thank you so much. You are listening to Bloomberg Business Week. Carol Master along with Tim Stenovic. We are live in our Bloomberg Interactive Broker studio. So, you know the headline. We talked about it in the airline industry. Crossed at about 3:41 Wall Street time. JetBlue making that $3.6 billion offer to buy Spirit Airlines. This is from the New York Times. Again, Spirit had plans to merge with Frontier, but JetBlue coming in with a higher offer, certainly a big premium. So let's get to it with a member of our BI team.
Bloomberg Intelligence senior airlines analyst George Ferguson joins us now on the phone from our Princeton bureau. Your reaction to this, George? I mean, because at first when Carol and I saw this headline, we're thinking to ourselves, wait a second, Spirit Airlines and JetBlue, not really the type of service that really complement one another versus Spirit and Frontier, right? We're talking big discount carriers, but at this point in JetBlue's age, JetBlue is basically competing in terms of service with the more established Uniteds and Americans.
Yeah, agreed. I think the big challenge here would be that I think the cultures are very different between Spirit and JetBlue, and so JetBlue kind of really lives between two different worlds where they've got an upper level product like Mint that's competing against the United, American, and Delta.
Right.
But at the same time, they got the back of the airplane where they're trying to provide the cheapest prices possible, the cheapest ticket prices possible, and they're running up against Spirit and Frontier. And so to me, it feels a little bit like if you can't beat them, join them. Right?
Yeah.
So
is this kind of a mass market play?
I think so. I mean, the big challenge with JetBlue is it lives in the middle ground, like I said, and it's largely a regional carrier, right? It's an East Coast and Caribbean carrier. So
Hawaii,
this gets them a lot more geographic breadth. Yeah, it gets them more geographic breadth. And we got a consumer right now that's really challenged in the pocketbook, and so people are going to have to drive down costs at the airlines to drive down fares and keep attracting the consumer. And this could be a play to go more discount than JetBlue is right now.
I have to say, we think about when JetBlue first came on the scene, George, right? And they really were doing it differently.
Satellite TV, nobody had that.
Right.
Satellite TV for free.
All the snacks you could have, that cute little basket, the blue chips. But they also didn't have the legacy costs. They are now an older airline. They do have some of these legacy costs.
It shows in the interiors, too.
Yeah. And Tim and I were kind of remarking, and I think this is a move in the whole industry where, JetBlue their service was incredible in taking care of everything, but increasingly even they are jumping on that everything being automated, and you kind of do it yourself, even if you're flying Mint.
Yeah, the problem is, again, the consumer is really paying, to go from A to B, unless they're, again, a business customer that kind of wants more of that service in front of the airplane, and they want a worldwide network. But when you get to the leisure traveler, they just want to get to A and B and spend their money when they get there, largely. And again, as ticket prices go higher, because fuel prices are higher, given the Ukraine invasion and things like that, the consumer is going to be, their pocketbook is squeezed more, and they want a cheaper ticket price. And this could be a way to do that. But merging these two cultures and getting an ultra low-cost culture into JetBlue, to me, seems incredibly hard. Right?
So does that mean then that JetBlue goes, for lack of a better term, down market, rather than Spirit moving up market? Would JetBlue start to look more like Spirit if this goes through, or would Spirit start to look more like JetBlue? Because they're very different.
Yeah. So that's the big question, I guess, right? And so typically what I find is when you put pilot groups together, the world migrates towards the better pilot contract, right? And JetBlue pilots get paid better, so it'll be hard to get, lower in cost. And so maybe the play, again, is, I think every airline has to think about getting costs down, and that's all about size. And so this helps. But yeah, JetBlue, I think, maybe they'll try to carve a niche that's somewhere between ultra low cost and full service, and it looks like, I don't know, Southwest with a Mint product in the front, but they're still not anywhere near the size, right?
What happened?
So
what happens?
Goodbye to those assigned seats, I guess.
What happens to Frontier in all of this?
Yeah, Frontier was doing this was going alone already. I think the other big challenge in the marketplace right now is labor, right? And I think Frontier's biggest problem was attracting pilots and attracting crews and getting them to want to stay and showing them a career path. So that really hurts Frontier if this unwinds.
Does Frontier come in and make another offer? Can it?
Well, it was. You know, I think nothing is ever done is my experience.
Yeah.
So I would just say a lot can happen, you know, between now and then, right? And so, and to me, merging Frontier and Spirit seems to work better, work more logically. So I would say nothing is ever done. We'll see.
George, very briefly, 30 seconds. Regulatory concerns here?
I don't see them, right? I think that if Spirit Frontier can be together, which I think they can, I don't think they're critical. You know, I don't think they have so much heft. They would sort of have too much influence in the market. I think JetBlue and Spirit could be put together easily too, without too many concerns. There will be questions, but I think it could get done.
George Ferguson, Bloomberg Intelligence Senior Airlines Analyst, joining us on the phone from our Princeton Bureau. George, really appreciate you jumping on for this breaking news. Let's get a check of the latest world and national news, or actually business news. Here's Charlie Pellet.
Thank you very much. It was a down day on Wall Street, Tim. The Dow, the S&P, NASDAQ all closing at or near session lows. S&P down 57, drop of 1.3%. The Dow down 280, drop there of 0.8%. NASDAQ down 328, a drop there of 2.4%. 10-year yield 2.54%. Spot gold down 0.5%, 19.22 the ounce. West Texas Intermediate crude down 2.5%, $100.68 a barrel. Equities and bonds fell as traders weighed hawkish Federal Reserve commentary and a new round of potential sanctions on Russia. Well, certainly the day's big aviation story, we've got JetBlue making a $3.6 billion offer to buy Spirit Airlines. This, according to the New York Times. George Ferguson is a senior aerospace analyst with Bloomberg Intelligence. He was interviewed moments ago right here on Bloomberg Business Week.
And again, as ticket prices go higher because fuel prices are higher, given the Ukraine invasion and things like that, the consumer is going to be, their pocketbook is squeezed more and they want a cheaper ticket price. And this could be a way to do that. But merging these two cultures and getting an ultra low cost culture into JetBlue, to me, seems incredibly hard.
And JetBlue shares lower today by 7.1%. We had Spirit Airlines up by 22.4%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. So earlier we talked a bunch about the small cap stock universe with Bloomberg's Gina Martin Adams. It is an important metric, part of our economy to really keep track of in determining overall health. We talk so much about the importance of the small cap and startup community, and we've got a great voice on that.
Yancey Spruill is CEO of DigitalOcean. Yancey's with us in the Bloomberg Interactive Brokers studio. A real treat to have you here in person, Yancey. How are you?
Doing well. Thanks for having me.
Yeah, thanks so much for joining us. Hey, we've been like the big theme with our guests lately and of the last 6 or 7 weeks has really been focused on disruption exposure when it comes to Russia's invasion of Ukraine. Give us your exposure to, especially because tech companies, you know, there are a lot of startups, and you're not a startup anymore, you're public now, but you're a decade old. But what is your exposure in Ukraine or Russia?
Well, we have over 610,000 customers. We're in 185 countries around the world. We do have we have customers in Russia and in Ukraine. And as we've said, it's slightly over 3%. It's roughly equal between Russia and Ukraine. And Russia's growing slower than the company, and Ukraine's been growing faster. And we've had a pretty strong point of view that, we need more internet, certainly in Russia, more information, not less. And so, we're still open for business for everyone.
One of the very few companies that is remaining in business. Tell us what goes through the calculus there. You said you want more information, more access.
When you think about what DigitalOcean represents, we are the gateway to the internet for any idea, any small business that wants to engage with humanity in terms of starting a business or getting that idea out there. And our view is that we have a policy around restrictions that, wants to keep things safe, et cetera. But, the town square, if you will, is important. And I think, from our perspective, most of our customers, if not every one of them, didn't sign up for what's happening. And to the extent that they can be a point of light, of truth, of transparency, we want to encourage that.
Well, it is, though, like...
Now, let me just be clear. We're complying with the law. And so to the extent that we aren't, that's very important for everyone to know. But subject to that, our view is that we want to keep the internet open.
Well, and it's certainly a sign of the times, but right, with keeping it open, if we believe in freedom of speech, right,
Yes.
you'll let it out there. At the same time, we know that speech can be full of falsehoods. And I think about growing up in the media industry, papers and media organizations, traditional media had to be accountable. They made mistakes that went to their brand and their credibility. In a world where social media can throw everything and anything out there, the cloud can be host to everything and anything. What is the right balance? Because there is right and wrong, there is fact, and there's falsehoods.
When we look at our business and the diversity of, imagine an engineer or a couple of developers in Nigeria, or in Venezuela, or in Moscow, or in Hanoi, Vietnam, or in Soho or New York. We serve humanity and the ideas of human beings, over 610,000 customers today. There's over 100 million small businesses in the planet today. That grows by about 14 million a year. And there are about 30 million software developers that are expected to be 50 million by the end of this decade. That's who we serve. They come to DigitalOcean to learn, to test an idea, to launch a business. And what we've found is it's very difficult to police. We have a very clear policy around certain criteria. But
do you feel like you have real transparency, though? You know what I mean? In terms of if a company comes to work with you or a client,
we have transparency in terms of what people are doing on through our computer servers, and we enforce the policy. And every customer has to sign up to our terms of service, and we enforce it. We have a significant investment in security and people that police in our company. We have technology that we've invested in, pretty significant. Dozens of people who work on process. The internet has been, on balance, by far a force for good for the planet. And we certainly learned that during this pandemic. Yeah. There's an underbelly to that, and we police it pretty routinely. And we're very proud of that. People come to DigitalOcean because they trust that this is a place that they can build a reputation, build a brand, build a business. And we take that extremely seriously and invest accordingly.
Well, help explain more about your business in Russia and Ukraine, specifically Russia, because if you do say that the internet is this sort of gateway to the truth and the idea that it helps bring some light to the country, at the same time, Putin's government has succeeded in choking off independent news. And a lot of news organizations from around the world have had to stop actually working in Russia because if they're working there and disseminating information, they're essentially in violation of the law. Are you able to make sure that, what is the type
we routinely enforce our policies around a host of issues and aspects of what we allow to be promoted on our.
But what are the types of companies that you're serving in Russia?
I was just talking with someone today about an orphanage. Somebody had a website that was trying to help in Russia around an orphanage. So the diversity of the businesses that we have, mostly our customers are tech-enabled businesses. Mm-hmm. VPN, media streaming, blogging, SaaS applications, et cetera, ad serving, education, and so entertainment. And we have a very diverse set of customers. We don't sort of angle against any particular industry, et cetera. We generate, over 10 million visitors to our website a month. Those visitors come to read our tutorials. We invest a lot in education and learning. We call it our community investment to help people get their ideas, how to write software in open source coding, how to integrate other applications in open source, how to do things on somebody else's cloud, not just in our cloud technologies. So we really invest in people's learning and growth, and those become, as they learn and generate a passion and germinate an idea, we incubate those. And again, I said over 610,000 of customers, they come here to test, learn, and basically realize a dream of entrepreneurship. And we have such a diversity. It's such an amazing company because we do, the barriers to getting an idea onto the internet and starting a business, we decimate those barriers. and really open up entrepreneurship globally for people who historically have been underserved by the traditional avenues in technology.
We're talking with Yancey Spruill. He's Chief Executive Officer of DigitalOcean. They are New York-based. He is in our Interactive Brokers studio. So you sound pretty optimistic about the growth in the business. The stock's down about 29%. There's about a 10% position when it comes to outstanding shares, the float specifically. What do you think? Why do you think the stock is down? What is it that, in terms of your messaging and your narrative, why aren't investors maybe buying in more aggressively?
Well, we did an IPO in March just about a year ago at $47 a share. So the stock's up from the IPO.
56 right and change today.
Obviously, valuation multiples in technology have been all over the place. And what I'm really proud about, what our team focuses on, are things we can control. We focus on delivering for our customers. We focus on giving our employees an incredible experience, and we focus on delivering growth and free cash flow for our investors. And over the long haul, we think the stock market's a great weighing machine. And I think in the near term, as we've seen with volatility, and but we've beaten our numbers every quarter, and very proud of that. And that's what we can control: set expectations. And I remember my first day on at DigitalOcean, walking in with our CFO, Bill. I said, "This is easy. Just beat the numbers." Business is easy. You just set the right expectations, and we're focused on that. And that includes over-delivering for our customers, having a great experience for our employees, that they can have a career-defining opportunity in this business, and delivering outsized performance for our investors. And I think over the 3 years that I've been here, and we're just getting started on the opportunity to create a ton of value here.
You said that your white space for the company is those small businesses.
Yeah.
How do you stay with them as they grow and throughout their journey, and make sure that they don't go to an AWS or a Microsoft Azure as they grow and need more?
Yeah, it's an incredible business. So I said we have 610,000 customers. About 500,000 of those are really, really small, early stage ideas. And then there's another 100,000 who started in that smaller bin, who graduate on the platform. We talked about one of the last earnings call, customer, 8 people around a computer in Tel Aviv. They started at $20 a month 7-8 years ago. Wow. They're a $2 million revenue business to us, approaching 9 digits of revenue for themselves. And that's what we do. And so we support the scale of these companies by giving them really high performance capabilities to get the idea off the ground. And then both in terms of the infrastructure, and then we have a suite of software services around that. So as they grow their employees, as they grow their customers, they can do that in a high quality way. We have infrastructure all over the world. So we have highly performant capabilities targeted narrowly at a small set of the market in terms of small businesses and startups. And, we have a lot of companies that have a ton of runway.
So is it okay, because we're running out of time, but is it okay to just stay in that smaller space? There's plenty out there for you. You don't have to become like the other big guys. That if you have to hand them off to another bigger firm, that's okay.
Absolutely. The 100 million SMBs around the world, they're all digital today. If they weren't before the pandemic, we're not debating that anymore.
Right.
The 30 million developers, collectively, they spend $70 billion today on IT infrastructure in the cloud. And we're only 500 million of runway. And it's incredibly efficient for them. A recent Forrester report said they get a 200% IRR on their cloud spend on DigitalOcean. So it's a huge return for them at a low investment. And that's the beauty of our business. We have created a venue for digital-enabled businesses to grow and thrive at a really tiny price point.
5 seconds. The economy looks strong based on what you're seeing from your customers? Very quickly.
SMB economy is very resilient.
All right. You know how to take a cue. Thank you so much. Great to check in with you. Yancey Spruley, he's Chief Executive Officer of DigitalOcean, be here in our studio.
Thanks so much, Yancey. Let's get a check of what's going on when it comes to business news. Here's Charlie Pellett.
Thank you very much. We're keeping an eye on that big announcement from JetBlue today. As reported by the New York Times, Spirit Airlines, meanwhile, confirms it has received a takeover offer from JetBlue. Spirit shares soared after the New York Times reported JetBlue Airways offered to buy the ultra-low-cost carrier, potentially spoiling a competing bid by rival Frontier Group Holdings. Today, we saw JetBlue down 7.1%, Spirit up 22.4%, Frontier Group Holdings up by 3.9%. Equities and bonds fell as traders weighed hawkish Federal Reserve commentary and a new round of potential sanctions on Russia, ratcheting up global tensions over Moscow's invasion of Ukraine. S&P down 57 today, a drop of 1.3%. The Dow Jones Industrial Average down 280, a drop there of 0.8%. NASDAQ down 328, a decline of 2.3%. 10-year yield 2.55%, 2-year yield 2.52%. Spot gold down $9 the ounce to $19.23, down 0.5%. West Texas Intermediate crude down 2.4%, $100.78 a barrel. So a down day on Wall Street, but what about the inverted yield curve? Anu Gagar is global investment strategist at Commonwealth Financial Network. She was our guest right here on Bloomberg Business Week.
There is about an 80% probability that a yield curve inversion is followed by a recession. And that is a strong correlation and explains why the market is so volatile. But the inversion in and of itself does not cause a recession. And it does not give a good sense of the timing for recession.
A hypersonic cruise missile developed by Lockheed Martin and Aerojet Rocketdyne Holdings completed a flight test in a push to develop the ultra-fast weapons for the Air Force and Defense Advanced Research Projects Agency. Today, Lockheed Martin shares up 0.7%. Aerojet was up by 0.5%. Recapping, S&P fell 1.3%, 10-year yield 2.55%. I'm Charlie Pellett. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. So the Oakview Group has built state-of-the-art arenas in Seattle, New York, and Austin. Now it's going after Sin City. So we are delighted to have back with us someone who has been uber busy. In fact, Tim and I caught up with him and New York Islanders owner John Ledecky. That was just in November for the grand opening of the UBS Arena here in New York City. So we are so excited to have back with us the CEO and co-founder of Oakview Group, Tim Ledecky. He is former CEO of AAG, former president and CEO of Maple Leaf Sports and Entertainment. He is with us via Zoom from Austin, Texas. How are you?
Good, Carol. How are you? Good to see you. Oh, I'm not seeing you. Good to talk to you.
We're here. Don't worry, Tim. We're here.
I can see you. You have been really, really busy. We want to get into what you're doing in Vegas. Tell us, though, about UBS Arena. We had a blast when we were there with you in November. How's it going?
It's actually going great. The concerts have come back. We just did a bunch of sold-out nights with Billie Eilish. She was phenomenal. We just had Sebastian in the house. So it's funny. The Sebastian concert was supposed to be right before New Year's Eve. COVID pushed it back. So we finally got him in last week. He was unbelievable. So the building's doing great. We're glad to see the return of music. The Islanders are making a late push here. They're 11 points out of the Capitals. We'll see if they got enough left in the tank. But all in all, we are glad we're through the COVID. We're glad we're in the new kind of norm of what we had to deal with COVID. And we're glad all the concerts have come back.
Tim, one more on the UBS Arena. What does the schedule look like for the remainder of the spring, for the summer, for the fall? What does it look like in terms of planning?
Well, I know why Live Nation stock is so good because it's unbelievable for the concerts. And so there's just this pent-up demand from the artists and the bands where they haven't been able to tour for 2 years. So if you think about it, the artists, all of their road crew, all of the people that ultimately are our stagehands that produce the concerts, everyone's really been pretty much out of work for a couple of years. They're all anxious to get back, and all of them have come back. So we look like we're going to do about another 40 concerts for the remainder of this year at the building.
Wow.
And the good news is everything's selling out. So we've even had some concerts like Billie was a last minute add-on because it was actually her Toronto date. She couldn't get into Canada, pushed it down to our building, and we sold it out in a matter of weeks. So it's good to see music back, and it's good to see people coming back into the facilities and feeling good about life.
Hey, I know Tim said that we only had one more question on the UBS Arena, but I got to ask you, because having been there, the space was gorgeous. We talked a lot about it, how it is set up for be a place with kind of lounges, almost a speakeasy feel, and then you've got areas that feel like you're walking through this gorgeous, gallery. It is a place to kind of have experiences and hang. Is it playing out as you hoped in terms of people really just wanting to kind of to be there, not only to see something, but hang there with friends or family or what have you?
It is. So again, everything's an education. Obviously, the biggest issue we've had to work with is transportation and how we get people there, how you drive there, how you get out of the parking lot. You got to deal with crosstown, and so there's no way to reinvent that. I've learned at the end of the day, crosstown traffic is crosstown traffic, and so what we had to deal with on the turnpikes and on getting people to and from the building, we had to inherit the system. Now, all of that's going to change in May when we open up both sides of the Long Island Railroad station that service UBS. So that's going to help us and be able to get us getting customers both ways on the Long Island Railroad line. So that we're looking forward to that. But in the arena itself, the VIP hospitality has been unbelievable. We've sold out of all of this. I think we have one suite left, which is fantastic. Our club seats sold fairly well. We only have a couple of dozen club seats left. Sponsorship's gone well. So, it's interesting. I was talking to our people here, as you could probably tell by I'm not in the middle of an Eagles album here. I'm in Austin, Texas.
I was going to say to everybody,
you got horns growing.
I was going to say, Tim, everybody who's watching on YouTube, Tim doesn't have horns.
You know this, okay?
Even though it looks that way.
No.
Go ahead.
But we were talking about how hard it is to open up 4 arenas in 6 months, but how almost impossible it is to think about opening up 4 arenas in 6 months in the middle of COVID. And so our company, our folks that do this, the development side, all of the architectural firms, all of our general contractors, when you sit there and look at UBS and realize we opened that up in the middle of COVID, and we opened up Climate Pledge and then in Market and Savannah, and now the Moody Center opens up in 2 weeks in Austin. It shows human willpower. We can get through all of this. We can make this work. We can be optimistic and entrepreneurial, and we've been rewarded because business is really fantastic at all 3 of the arenas.
Right.
And in Austin, we have 12 concerts in the first month that are all completely sold out. It's incredible.
Tim, hang on for a second. By the way, Elon Musk is calling. His Boring Company has a solution for you to get everybody transportation-wise.
We did get stuck in a little bit of that traffic on the way back from the arena.
Tim, hang on for a second. We want to talk Vegas, and we've got a big chunk of time on the other side of this break, and we'll come back with Tim Lewicki. He is, of course, co-founder, CEO of Oakview Group. He is joining us via Zoom from Austin, Texas. We're going to continue this conversation in just a moment.
Yeah, we got to talk Vegas and what the company is planning.
We're headed to Vegas soon.
$3 billion Las Vegas entertainment hub. I don't think it'll be done by the time we get to Vegas later next month.
I don't think so. All right, folks, a lot going on, including a deal that looks like, at least according to the New York Times, that JetBlue offer for Spirit. A lot going on. We'll get to business news in a little bit, but right now we got to get to world and national news.
Thanks. Ukraine's President Volodymyr Zelensky says the Russian military must be brought to justice for committing war crimes. He spoke to the United Nations today through an interpreter.
The massacre in our city of Bucha is only one, unfortunately, only one of many examples of what the occupiers have been doing on our land for the past 41 days. And there are many more cities, similar places where the world has yet to learn the full truth.
Zelensky says Russia is abusing its veto powers at the UN Security Council to block efforts toward peace. He says if the Council cannot prevent that, it needs to reform or disband. Russia's war on Ukraine has brought the world's energy consumption into sharp focus. As Bloomberg's Nathan Hager reports, the world's leading climate finance experts say too much money is going into fossil fuels and not enough into green energy, and that leaves the world at a climate tipping point.
2 separate NGO reports show more than half the world's 150 leading financial institutions have no limits on paying for oil and gas, and 2 out of 3 of the world's biggest banks and asset managers are failing to set concrete climate targets for this decade. The latest report from UN-backed climate scientists says the world is on track to warm by 3 degrees Celsius. That's twice the target from the Paris Agreement. The scientists say there is a systemic underpricing of climate risk in the financial system. In Washington, I'm Nathan Hager, Bloomberg Radio.
Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
All right, Nance, thank you so much. Nancy Lyons in D.C. We're going to get back to Tim Lewicki in just a moment. But in the meantime, a story popping up on our radar has to do with Manhattan apartment sales continuing their hot streak in the first quarter, rising demand clashing up against an inventory crunch. It's a story we talk over and over and over about. So basically, you've got bidding wars in a growing share of deals.
Purchases completed above the asking price made up 9.3% of all transactions. It's the highest portion in 4 years, up from 3% in the first quarter of 2021. That's according to a report that came out today by Miller Samuel and brokerage Doug Elliman Real Estate. Competition, Carol, was intense, especially on the luxury side, which saw its second highest rate of bidding wars in the 5 years that the firms have been tracking the data. Luxury listings, which represent the top 10%, fell annually for a third straight quarter and stayed below pre-pandemic levels.
Which is so fascinating because I think about how many times throughout the pandemic that we had conversations about the death of the city and people saying they're going to leave some of the major cities and people not come back. And we definitely have seen movement, people going south and other places. But what's interesting is more workers are definitely being called back here into New York City. Manhattan's cultural life is back. Theaters are open. Restaurants are opening. And so we are seeing that help to contribute to buyers coming back and really commit to buying once again in the city.
What do you think the median price of a deal was
I'm
in
not
the
going to
quarter?
cheat.
Don't cheat.
What was it?
$1.19 million. So up 11% from a year earlier. Here's the thing. We've been talking a lot about how higher mortgage rates could affect the real estate industry. Well, not if you're paying in all cash. About 40% of purchases were made in cash. So that, according to Miller, is a sign that rising mortgage rates won't devastate demand.
And we'll see what happens in spring. Another report by Coldwell banker Warburg saying it anticipates more apartments to hit the market in the spring. It's a time when you do see people come out, right, and often start to maybe do some listings, or people coming out after the winter hibernation and say, well, maybe I want to do some shopping. So we will see and watch these numbers, but it is interesting to see these prices.
We're just talking about deals like, 14 months ago.
Yeah, exactly. All right, we're going to get back to Tim Lewicki in just a moment. We're going to talk about Vegas and his plans there. This is Bloomberg Radio.
In case you missed it, our latest Business Week podcast features our conversation with ARK Invest founder and CEO Kathy Wood. She talks Elon Musk, taking a stake in Twitter. She talks investing in Chinese stocks and so much more. Download it now at Bloomberg.com or wherever you get your podcasts.
You're not Catherine. You ready, babe? Here we go. 3, 2, 1. We'll break down the minutes from the latest I've already, wait. It's more about balance sheet. Okay. 3, 2, 1. We'll break down the minutes from the latest Fed meeting and ask Michael Sheldon of RDM how many rate hikes he thinks he get. Okay, 3, 2, 1. We break down the minutes from the latest Fed meeting and ask Michael Sheldon of RDM how many rate hikes he thinks we'll get this year and maybe what he has to say about the balance sheet.
And Janet Foudy, executive chair at Deloitte US, on her book about women's leadership. It's called Arrive and Thrive. Hey, it's 4:45 on Wall Street. Time for a drive time traffic. We do it every 15 minutes right here on Bloomberg Radio. Ed Kalegi, the George Washington Bridge. What's going on?
Outbound upper level of the George Washington Bridge, Tim, a broken down tractor trailer underneath the apartments. It has the left lane blocked, and that is why the Cross Bronx is a very heavy ride all the way in from the Bruckner interchange, even though they did just clear an accident at Jerome Avenue, and it's now a very heavy ride both sides of Manhattan trying to get up to the George Washington Bridge. The west side slows now as early as the mid-60s. The east side in pockets coming up really from the mid-30s all the way up the FDR Drive. Outbound side of the Holland Tunnel at this point stretches back 30 minutes, 10 minutes in from 109, and 30 minutes to leave town over at the Lincoln Tunnel. Traveling over in New Jersey Turnpike, Newark Bay Extension, westbound coming in by the bridge. An accident, it's a half hour from the Science Center. Bloomberg 11:30, 3-day weather. For tonight, periods of rain, low 50. Wednesday, morning rain, high 55. Thursday, more rain likely, high in the mid-50s. Friday, clouds and sun, maybe a shower, high 65. Right now, cloudy in New York, 52 degrees. If you're looking to hire, look to Indeed. With Indeed's hiring platform, you can attract, interview, and hire candidates all from one place. Visit Indeed.com/credit. With the best ride in and out of the city, I'm Ed Kalegi. Bloomberg 11:30. Bloomberg Business Week continues.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. We've got the Dow, the S&P, NASDAQ all declining today. Equities and bonds fell as traders weighed hawkish Federal Reserve commentary and a new round of potential sanctions on Russia, ratcheting up global tensions over Moscow's invasion of Ukraine. S&P lower, led by losses in technology and consumer discretionary shares. The S&P down 57 points today, a drop of 1.3%. The Dow down 280, down 0.8%. NASDAQ down 328, tumbling 2.3%. 10-year yield 2.55%. The 2-year yield 2.52%. Spot gold down 0.5%, 19.22 the ounce. West Texas Intermediate crude down 2.5%, $100.72 a barrel. JetBlue Airways is offering to buy the budget carrier Spirit Airlines for $3.6 billion, potentially spoiling a competing bid by rival Frontier Group Holdings and reshaping the landscape for ultra-low-cost air travel. Recapping, stocks declined with the S&P down 57, a drop there of 1.3%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thanks so much. Let's get back to Tim Leiweke. He is, of course, CEO, co-founder of Oakview Group. He's still with us via Zoom from Austin, Texas. All right, Tim, let's go all in on Vegas. Tell us what you want to do there. $3 billion and calling it an entertainment campus. What is this all about?
So the concept is, if you look at live entertainment in Vegas, it is doubled, tripled, and quadrupled with the number of shows and the number of artists that want to play there. And ironically, although there's 5 arenas in the marketplace, only one of them is fairly new, and that is where the Golden Knights play at T-Mobile Arena. So the concept is we build a pointed destination where the hotel, the casino, the arena, and a new theater are all interconnected and intertwined, designed together so that when you stay in the hotel, you could go right into the arena, right into the theater. We try to think about a pointed destination that becomes a district for live entertainment, similar to what LA Live was in Los Angeles. Now we create that in Las Vegas. We're the first resort that you're going to pass when you come into the 15 and you're driving in from Southern California. We're 5 minutes from the airport. So instead of going right into the strip and the congestion, you go left into our district. And our property is right next to where the Brightline terminal would be that would connect a speed train between Southern California and Las Vegas. So it's kind of a vision for where we think the future of Vegas is. And we've seen hotels and properties built around the exhibition business and the convention center business. This is being built around the live entertainment business.
Tim, where are you in development right now? When is it going to open?
It's going to take a while, so we're probably a year away from pushing dirt. We've brought on both Populous and Gensler to help us design the arena and to help us design the district. We're bringing in some pretty smart people on getting us through the entitlement, but we're in a perfect part of the town as it relates to traffic. We're probably the least congested piece of property because we're at the 15 and the 215. So a lot of access on and off both of those freeways to our particular piece of property. But I think we're probably pushing dirt next year. And then this is going to take about 3 years to build. So we're looking at 2026 by the time we open.
It's so interesting to talk to developers with a time horizon like this because so often we're talking next 6 to 12 months in financial markets and trying to get an understanding of the gauge of consumer, Tim. So help us understand the calculus that goes into making a long-term bet like this that you know that you're comfortable investing billions of dollars and saying, hey, this thing is going to work out. What tells you that that's the case?
So by the way, you're right. You're in minutes and hours, right? If you look at the world you live in, to look at what just happened with JetBlue. So what we have to do is kind of, it requires a little bit of Nostradamus and an entrepreneurial spirit. You got to see 3 or 4 years down the road where all this is going. Well, if you segment the thinking here and say, first of all, is Vegas going to get any less popular? I don't think so. You look at what Resorts World built there, phenomenal new development there, and there's new developments with the Fontainebleau and others coming online. So I think the demand for people that want to go to Vegas is going to be fantastic. Is live entertainment going to continue to grow there? Fact is, there's more residencies and more artists. When we started with Celine Dion at Caesars, there were a half dozen artists that did residencies and live entertainment in Las Vegas. Now there's over 30 different residencies of artists that ultimately are doing extended stays in Las Vegas. If you look at sports, now you suddenly see what happened with the Raiders in the new stadium. You look at how well the Golden Knights have done. It's pretty amazing because what you got to think about with Vegas is it's not the 2 to 3 million people that live there. It's the 50 million people that come in from all over the world in order to spend time there. And obviously, we want to be in a position where we prepare and build an arena that if the NBA decides to look at Las Vegas, we would meet all of the standards and we would create an economic upside within that arena that would help make the NBA a economic feasible proposition to somebody in Las Vegas.
Yeah, sports. You definitely are thinking about this and all of this. How big is it if an NBA team? What are the conversations, Tim, that you're having around that so far?
Well, it's very clear to us that there's only a couple of people that are going to make this decision on the NBA in Vegas. One is the commissioner, Adam Silver, and the other is the ownership group. And the 30 owners, they have to decide if they want to expand. That's not our decision, nor do we know something that no one else knows. So we don't have any expectation, any guarantee, or any promises made to us from the NBA. And by the way, this arena and this district that we're building, it will work just fine with live entertainment and other sporting events. And so we can live off of music. We can live off of UFC. We can live off of boxing. We can live off of other events that we could ultimately activate into the arena. And without the NBA, we don't have the calendar issues. So our dates are much more populous for those kind of events. That said, if the NBA gets to a point where they look at expansion, we certainly have Climate Pledge Arena in Seattle. That is a perfect arena now for basketball. We've designed all of our naming right deals, sponsorship deals, suite deals, premium deals, so that we have the upside of the revenue for the NBA. We have an ownership group and partners with David Bonderman and the local partners in Seattle that are ready to step into the NBA. So now you combine that with Vegas. And yes, we do have conversations going on with folks that are interested in the NBA in Vegas to have 2 world-class arenas that are 2 standards met for the NBA that both have the economic wherewithal to drive the kind of revenue necessary. Now it's just awaiting their decision. When we started Climate Pledge Arena and we started the construction of that arena in Seattle, we didn't have the guarantee of the NHL, but we knew they would come. Well, I think we feel that same way in Vegas.
Where are you when it comes to naming rights? We're at the UBS Arena in Long Island. You mentioned the Climate Pledge Arena. What are you thinking for this project in Vegas?
And just have about a minute left, Tim.
Yep. So obviously we're going to get Moody Center open next, which is a couple of weeks from now. By the way, one of our first events is George Strait and Willie Nelson. So that's 2 nights of those two. That's going to be fun. I think we then will turn our attention towards not only the planning and the design of Las Vegas, but the economics of Las Vegas. Our group, our global partnership group, has sold more naming rights for arenas than anybody in the world.
How much do you think this one would go for? Naming rights.
If I had to guess, I'm looking at what crypto just paid to remove Staples, and that was 30 million plus. It's probably in that ballpark.
If you're a gambling man, will it be a crypto company?
Well, I am a gambling man. That's why I'm betting $3 billion on Vegas, and I'm not going to make that commitment. But at the end of the day, I think we've already heard from about a half dozen companies that are interested because they understand that 50 million people coming into Vegas from all over the world and the platform this arena could have.
Well, Tim Lewicki, we love spending time with you. Good luck on it. You are a busy man, and we love you with horns or no horns. Just loving you there in Austin, Texas. That, of course, was Tim Lewicki of Oakview Group via Zoom from Austin, Texas. What a day. What a great way to end it up and wrap it up.
Let's go to Vegas.
We are going to Vegas soon. This is Bloomberg.
Don't miss Sound On today at 5 p.m. Wall Street time on Bloomberg Radio. Emily Wilkins and Jack Fitzpatrick speak with Republican Congressman Ken Calvert of California. Sound On today at 5 on Bloomberg Radio. It's 4:58 on Wall Street. Time for Drive Time Traffic. We do it every 15 minutes right here on Bloomberg Radio. Ed Kalagi, the Merritt Parkway. What's going on?
There is an accident on the southbound Merritt right now, Tim. This is coming in by exit 57, and a pretty heavy delay of at least 15 minutes on that southbound side. Northbound, you've got heavy delays on the Merritt building now from exit 41 to exit 51. Debris in the roadway on the Connecticut Turnpike. This